Hi everyone, I'm Joseph Tan. Welcome to Basic Business Finance. Today's topic is Structure of the Financial Statements Part 2. Lecture 2, Part 2. Objective here is that at the end of this section, you'll learn how to explain revenue and expenses in the income statement. The outline is we're touching on structure of financial statements, income statement basically, on revenue and expenses. The income statements provides information about the firm's operating results during a specific period, so for a period of time. It contains information on sales revenue, other revenues, and operating expenses. The income statement is also known as profit and loss statement. It has basic three elements: revenues, expenses, and profit. It can be simply summarized as revenue minus expenses equal to profit. One key difference between balance sheet and income statement is that balance sheet as at 31st December 2019, it shows basically a snapshot on a specific date, on the date of 31st December 2019. Whereas, however, for income statement, it shows, for example, income statement for the year, 1 year, okay, shows ending 31st December 2019. It shows a specific period where it starts from the 1st Jan and ends at 31st December 2019. Examples for revenue are sales of goods, interest earned from fixed deposit, rental collected from property, and fee and commission earned from the service you provided. Examples of expenses will be cost of goods sold, also cost incurred for service consumed by a company. Okay, cost of service consumed. Services, whenever you consume services, the company consumes service, you're going to pay for it. For example, salaries expense, rental expense for the office, and also interest expense when you borrow money from the bank. With all this information, how to find profit? Companies may make profit in certain years, but suffer losses in other years, especially during the economical downturn. The profit and loss statement will reflect their profit generation ability during this period. It basically means that can the company generate profit for this year when there's a downturn, example. So in the situation where you have revenue more than expenses, you get a net profit. However, if your expenses is more than revenue, then you will have a net loss. Profitable companies may return some profits to the shareholders in the form of dividends. It's important to understand this concept, dividends, because it's a very basic thing and important concept that you must learn, and it will be useful for subsequent topics. Okay, dividends. Basically, dividends is a form of reward for the investment in the company. This basically is to reward shareholders for taking risks in the company. Okay. Otherwise, if not, no investor will want to invest in the company. Dividends is not considered an expense. It's not for a considered expense. Not remember this word is not considered expense. So it's not an expense for determination of profit, but it will reduce the amount of retained profit in the company. Okay, please take note. This is not expense. You get to get this concept right. Okay, this is an important concept. It's not expense, and it's a form of reward for shareholders. We have come to the end of this section. Thank you for listening to me. See you soon.